The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 13th of March, looking at the Dow, up 92 at 32,000. It went all the way down to the 31,624. But look at this. This is the intraday action from let me get to this. This is from Friday. We're looking at, look at this. Look at these beautiful cup formations, arch formations, and all within this rectangle between 39.40 and essentially 38.43 for a long time. And then last night, out of the blue, there's a pullback, and then suddenly the market moves up sharply, pulls back again, goes sideways, and then breaks out and rallies all the way to this peak D right there. That high was, I don't know if it's showing as today, 39.38. No, that wasn't the high. The high was right there. Yes, 39.38.75. And at that peak D, turns around, 9 period goes under the 14 and turns down. And to this moment, it hasn't turned positive. And you plunge. I mean, the Dow itself was up. The futures were up almost 500 points. And then they pulled back over 700 points, more than that. And now the Dow itself is up 78. So, and the S&P, the E-mini you're looking at right now, is down 3 points, and now it's going positive. So there are a lot of cross currents. My suspicion is that if you had to exclude the banks, which is almost impossible, you could start to say, you know, there are some buys, there's some really interesting positions. I don't really like to mess around when you've got the financials in dire straits. And what I mean by dire straits is, yes, there's a bailout of the funds that people had in the different banks, but there are a lot of criteria that need to be discussed and will be discussed over the coming days. What's the implication going forward? So there's a lot going on. But on a purely technical basis, I think a tremendous amount of the selling has been, it's just been a general washout, and now we should be seeing some kind of a bounce, and we'll see what happens there. So this is going to be very interesting. Here we go. That's the Dow now up 100. Whoa, so quick. Look at this. 186 points. The S&P is trading at S&P. There we go. Is up 10 points, 38.71. Now all of a sudden the Dow is leading the S&P. The QQQ is up $2 at 290.56. Not bad action. IWM, Russell 2000, very poor, down 2.5 at 173.68. Here's the story. Gold got the benefit because, as I was saying in the update, this is where huge institutions and countries put money to work when they get really nervous, especially when it involves the financials. Money, I've always noticed, money tends to go to the banks. Now, sorry, it goes to gold. But what's really important is that sometimes it goes to gold, but you don't necessarily see the follow-up in the gold stocks. We'll see if that's going to happen. Hey, you've got the gold miners. Was up very nicely earlier on, still up well, up $1.75 at 28.95, but it's basically still within a range between, I'd say, 29 for another moment, 29 and 26s. At some point, if it starts to trade in the 30, this is the GDX, trades in the 75 up in the high 31s, that's going to be really good. But at this particular point, this is now a brand new A because it made a lower low in the Chapman methodology. Start fresh, here it is. This is a gray A because the MACD hasn't confirmed, the stochastic hasn't, it's still 22%. So either this is just the start of a move, and I must say, the way money has flowed into gold, not the GDX, but gold itself, over the long, look at this, here's gold. The way it's flowed in since about the beginning of March says to me there are people, big institutions and countries, that are very nervous about the global financial scene. And I think that's what we're seeing here. And if you look at the volatility index, that covers a different sector altogether. Look, the volatility index spiraled on Friday, but closed well off the high. That was in the 28th. Now the high is 30.81. 30.81. Yes, it is a leg. See, remember the Chapman wave. When it comes to emotional transactions that you see in the VIX index, I do not expect that that's going to conform. It does sometimes, but that's really not the issue. Going to peak Ds. It's a different vehicle altogether. So it's the only instrument that I don't look at in terms of a buy signal should go to a buy mode, should go to a PT. It's really very different. Now, the day is young. If by 3 o'clock this afternoon, there's been this washout to the downside, but there have been rally attempts, but the market isn't ready for it, and the Dow is down about 90 points or more, I would say watch the volatility index. If the volatility index stays up in the 28s, the high 28s, perhaps even in the 29s, that says the next couple of days, you're going to see a lot of volatility with action to the downside. If, in fact, the VIX index starts at about 3 o'clock, I don't care what happens in between, but from 3 o'clock on, if it's trading in the 2750s or lower, that says, you know what, some people are putting money to work, and that's important. But have a look at this weekly chart. I have a technique called the Chapman Wave Chapman Wave, there it is. Yeah. Inside track repellent zone. So I'll move this weekly chart over like this, and you'll see since that peak E at 38.94 the week of January the 28th of 2022. That's the week that we saw the Dow make its high. Funnily enough, look what happened. The volatility indexes. Look how many red candles are. Just a series of red candles, and yet the general market has been coming down. Now, all of a sudden, you've got 2 green candles in a row on a weekly basis, but the week is just barely we haven't even done the first hour of the trading week. So let's watch this because, look, on a weekly basis, you get a green candle, but very often it's followed by red candles, even if it's a bit higher. So I'm going to be watching this closely. On a weekly basis, if at any point this week there is such disillusion with what's going on in terms of the banking sector, and that's to do with the Fed, having to do with just the governorship of what we should be doing going forward, not right now. What's the implication for going forward? Are we going to bail out? Remember, I had spoken about this about 2 years ago, maybe even 3 years ago. I said, I'm beginning to get the sense, and it starts off from the little kids that you see with, little covers on the little pads on their elbows and their knees and everything. Nobody's allowed to get hurt. It's not like the old days, right? So it's a very different scenario. And all the way from the Madoff trying to get everybody whole again, I think we've got a new mentality. And that mentality says that the Fed is trying to do everything to get people whole. I'm not complaining. I'm just making an observation. That, in fact, would create the biggest downturn we've ever had in market history at some point in the future, because when the market goes down, 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 people want their money back, right? What's the government going to do? Anyway, let's get back to the market. I'll be back in a moment. Dow's up 33, S&P down 7.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're looking at the VIX index. VIX index is 28.95, up 4.04. Just watch this and look how this inside track has been the repellent zone. If this week we close above it, that'll be the first time in over a year, and that's going to be very important to monitor. Okay, within that context, I just wanted to say that for subscribers, we've been raising cash by raising stops that we just said. These are positions that are vulnerable if the market keeps going down. We can always get back in. We had half positions in them, split positions, I should say, and taken profits. The last one was today. Now what we're looking at is what happens next. And this is going to be a very important phase. Why? Because I like to use, have I finished all the other? I better just do this. I don't remember where I stopped. So the gold contract is up near the highs at up 43 at 1911. As I say, this is, I'm not even going to say big money. This is big institutions or countries that are putting money to it. This is my impression always, because I always see it and the volume comes in and it's big volume. I mean, there's a lot of volume the last 2 days. So I'm looking at this and saying, this is countries becoming concerned about the American financial system. Simple as that. Okay. Now let's go to the silver. Silver, and one of the reasons why I spoke about this on Friday was if silver starts to rally with gold, that's one thing. It wasn't doing that on Friday, not very well. Today, it's a big move, up 6%, up 6.3%, up 129 at 21.80. That's a really big move. Is this going to be the start of a move in the gold area? I think that we're looking at signs that say it's becoming way more important now. So I'm saying, yes, I'm looking at it as a potential in terms of a balance. If you have, say, a portfolio, but you need a balance, you can have, I think at this particular point, you can consider gold. And look, the XLF, which is the S&P Select Financial Spider Fund, down again today with all the saving, the banks, etc., minus 133 at 31.60. Once this starts, it's really hard for it to just suddenly stop. And there's something that is recognized by other institutions as being the right thing for the institutions, but then it has to also be assessed and said, you know what, is the government making it even more difficult by doing this kind of thing. What do you do? It's really tough. You just say, okay, that's it, goodbye. You guys put your money there and it failed. That's what happens. Or do you say there's a moral imperative here? There's a lot going on. So that's something else. The market's saying at this particular point, the financials tanking like this is really important to monitor. Now let's go to, within that context, I was very upset last week with the action in the IAI. And the IAI was holding well. We're still a long way back from 2020 in the 45 range. It hit 105 and now it's down to 85. It's already gone to 116 back in November of 2021. So it's in this big digestive phase. But this is not a good sign. I like to see the financials. I like to see the broker. Remember, I spoke about this. I said I can see a lot of small investors going into the market. And I did that by looking at, was it GBC? No, it wasn't. GCBT. Oh, let me just see what it is. There's just a very small brokerage house. And I follow this a lot over the years. But for some reason, I always seem to forget cancel. Okay, there it is. BGC, of course, BGCP. Look at this. This is a little baby financial, BGC Partners Inc., investment banking, and it goes from the threes way back in January, has a fantastic rally, a left side, right side price time matches, one that we wanted, and it's been tough to buy because it keeps doing crazy things. And it went just above the left side high of December, pulls back, then has another big spiral to the upside and goes to 5, was that 32 or something, 528? I can't remember exactly, 528. 528, now it's trading at 485. But this is telling me that there was money in the market to be used by people that are now deciding these are maybe the people that were in Bitcoin, etc., and they've migrated now to other areas. But it tells me that there has been a lot of trading, and I watched it. But the one that we watched most closely, I don't know why I keep slipping over to that blank chart in the middle there. I'll go to that, fix that. There it is Schwab. Schwab is down 11.54 at 47.09. 47.09 after that peak E in the weekly chart and a peak D in the monthly back in February of 2022 at 96 has been just cut in half. And look at it. I drew this in as a 1-to-1 to the downside. Chapman wave. One of the things that I like to look at is Chapman wave. I call this a parallel extension, meaning it has to have the same number of bars and the same angle. It's like the A to B equals C to D, but it's just the connotation areas. The speed is about the same. This is even quicker, and it plunged underneath the 50-51 area support. Today's low is 45. I'm not happy at all. I don't like this. I don't like it at all because I like to see Schwab. I like to see a certain IBKR was holding much, much better. Let's see what it's doing. Oh, Elizabeth. 89.69 area was the high back in early March. And here it is at 76.70, plunging down. Peak G in the daily, peak D in the weekly, and leg E in the monthly. I'm taking this seriously. That's all I can say. So, all right, I want you to go through those. I want you to go through something else as well. Look at the TLT. Remember I spoke about the TLT? I said that 99 double bottom says there's a chance that we could move towards the 200-period moving average of 109, but there was a high. What was the high? That was 100, and so it hit 109.10 today, and the high back on the 2nd of Feb was 109.35, and the high on the 18th of January was 108.77, and the high that was made on the 7th of December was 109.68. So this whole 109 area has been incredible resistance. Does it break through what's the Fed going to do right now? This is the TLT. Look at the TBT. The TBT is testing and just gone underneath the 1, 2, 3, 4, 5, 6. This is the seventh time that this area right here, the low that was made in December the 7th of 27.07, look, the 27s has been hit all these times right here. And today's low is 26.73. Does this become a PT, turn to the downside, yet another PT, fourth highest peak in the Chapman wave, and do we plummet underneath the support level? What are yields telling us? Yields are telling us that there's a sharp move to the downside. I want to cover some of the grains. I want to show you that wheat has turned down, it's trying to form a bottom, but a big move down. So the grains have been very weak. I'll be back in a moment. Dow's down 46.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Let me just get to this question that came in here. Next era energy. So you can see this monthly chart has this pattern that I look at, which is the large rectangle right here. It's trading at 74.82. This is NEE. Is a symbol. I don't know if I don't actually recall if I ever notated this. So this arch formation in the rectangle pattern says, watch out that it doesn't take out 68 as support. If it closes at 67 at any point in the monthly chart, that's a real problem. Right now, it's just juggling between the high 69 area, and I would even put it at 77. But it's a nice candle today, 74.79, up $1.80, and it's got a little narrow rectangle which it took out in the bottom. Now it's trying to go towards the top. So I don't know if you asked for this, but you just wanted me to post it. So I'm posting it saying it's under these conditions, it's acting pretty well. number one. Number two is if it can get to 75.35 in the next day, there's a real good chance that it'll worm its way. I don't know if it'll get there in this particular move right now, but the high that was made on February the 15th, that's the daily chart, February the 15th of 77.09, it's only at 74.71. And it's already gone very quickly from a peak A, 2 bars rest, then third bar goes to B, 1 bar rest, now it's gone to C. So this is just saying it's having a digestive phase from the big moves to the downside. It's trying to break out. It's trying to form a head and shoulders bottom. And it will be much more, I would just put it this way. I don't know whether you have a position or not. If you're looking at it, I think that it fits the category right now of perhaps a safety stock, because you know exactly where your stop is, 74.70. I would have probably just to start off with, I'd have a 2-point stop, and it wouldn't be a big position starter. I would have a 2-point stop. And if, especially in this leg C, if we can get to, what was the high right there? Yeah, if we can get to this bar, the high of the 21st of February of 75.53, and it can do this in leg C, then I would say to you, there's a chance that the stochastic, which is starting to move nicely now, it's still only at 63%. The MACD, which is good, the 9-period moving average is within a day or so of crossing positive. If that can happen, I think you've got yourself a nice counter, don't get carried away, but a counter trend move in this stock from its big move to the downside, especially the way it keeps pulling back, trying to rally, fail, pulling back, trying to rally, fail. This is the one that says it's got to be very successful and to get to the 200-period moving average of 79.78. It has, on a weekly basis, it has to close very nicely above 77.09. That was the high that I was mentioning from in February. And that would be a very positive thing. Otherwise, it's just going to stay in this range. But this is, all the technicals are hinting that this is a good area right now. I just want to have a quick look at the weekly chart. Haven't notated that, but I will just do this right now. Yes. So it made a lower low, not the lowest low, but a lower low than the low that was made in October the 21st week, 69.41. Last week's low was 69.64, just a tad lower. And the technicals in the weekly aren't really improving. So that's what I'm saying. It needs its work. It can turn into an arch formation that becomes a really powerful cup formation, but there's a lot of work to be done. And I'm just saying to you, a starter position. But I would start off with that stop that I just mentioned. I would raise the stop and tighten it if there is a rally. All right, with that said, a couple of questions. Can I look at Bitcoin? Bitcoin is trading, had a big move up, and you can understand why. Because if the banking sector starts to implode, money goes somewhere, and this is the thinking. I can just see it right here on the page. Up 3,525, up 17% at 23,450, when on Friday it was down in the 19,000s. That just says, as an alternate way of thinking, maybe Bitcoin can find some play. And that's the only way I would look at it, as maybe an alternate. There'd be a little bit more structure going into Bitcoin to give it some security. At this particular point, this is just an emotional spike to the upside. I just don't think it can last for, maybe another day or so. It's right at the 200-period moving average. I'll be very impressed if Bitcoin goes to 26,300 in this move. Actually, I won't be impressed. I'll be afraid, because I'd be afraid to look at the XLF, because that means the XLF could go the low that was made in the 29s back in October. I don't want to see that revisited, and the chart looks like there's a possibility. All right. With that said, I did that. Just wanted to say, oh, that's right. Crude oil right here is trading. It's come off the low quite nicely. It's down $1.18 at 75.51. It made a lower low than the low that was made early February. Today's low is 72.30. It's just in a rectangle formation in the weekly chart, just stuck in a range. Now, natural gas. Natural gas question came in a little while ago. What about UNG? So this is a very difficult thing. You remember, I said, let me just see UNG. What I've said before, that with this is the United States Natural Gas Fund, what you really want to see is off the low that was made at $7.14, a really strong move, right off the low. And then the next day, not giving the shorts even a second to cover, there's another whopper of a move, and it goes into the nines. That would say to me, that is a move where you're sold out. The rally that we saw said that was just a very concerted effort, a very orderly effort, with Friday being that spike high. And sorry, Friday, it wasn't Friday, it was a week ago Friday, I think, on the 3rd. What was the 3rd? The 3rd, well, yeah, it was a Friday. With that Friday spike high and then a gap down, and all of last week, it couldn't break above the 9-period exponential moving average. It's trying to do right now, but it's still negative. And there's a nice move up, 0.53 at 857. This is going to be the move that says to me, either natural gas has potential to go back into a buy signal, buy mode phase, which says that the 50-period moving average at about, 10.05 or something, 10.54, there, 10.54 could be achieved. If it is achieved, then we've made a low of substance in natural gas. As it stands right now, that gap down and then the failure to move with a sudden pop today, and this pop is in a sense related to crude oil's weakness, I think. It's just they rotate sometimes. I need to see UNG. So here's the question. Is this time to buy? So all I can say is it didn't go back to the 714 low. It did hit 8. What was Friday's low? 802. And today's trading at 860. So here's my suggestion. You know that if you're trading UNG, you're going to be able to you're going to have some kind of a position that's tradable during the evening. Now, some people have a platform that says yes, some people don't. Make sure it trades 24 hours a day. That's all you want to know. Whenever the market is open, whenever the United States gas, when the actual contract itself is trading, you want to be able to participate. If that's the case, then at 860 right now, I would just tiptoe in a little nibble, and even that, I'd have a 30-cent stop, and we'll come back to it. I'll be back in a moment. Dow's down 5, S&P's down 7. Okay.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so QNG trading right now at 861, 860. Remember that if you go into these various commodities, sometimes there are other tax implications you just need to be aware of. It's just a little paperwork. It's not a big deal. Shouldn't change your trading. Just be aware. Now, I want you to, where did it go? A question came in, or 2 questions over the weekend. OIH. Where do I think it can stop on going down? OIH was is the Van Eck Oil Services ETF. I'm beginning to think that the oil sector itself has been under pressure, and that if you're looking at, so this is the Van Eck Oil Services. If I put oil, this is a multinational, it's a different thing, but the chart looks pretty much the same. If you're looking at Exxon, it has gone from about 119, 120, that area, down to today's low of 103. That's 16, that's, 15, 16%. If you're looking at CVX, that is Chevron, that's gone from 187 down to today's low of 153. So that's a little bit bigger, a little bit bigger percentage. But the more I looked at these over the weekend, the more I was thinking that there could be pressure, further pressure on the oil. So let me just go to something like a Schlumberger. I don't think I've updated it for a little while. Made a peak F-top way back in January, around about 59, trading right now at 49.82, down $1 after being down at 48.32. Made a peak D in the week. Yeah, the more of these stocks that RIG has been fantastic, but even RIG, look at that turnaround. That pyramid looks like an arch formation. Straight up makes a brand new recovery high to get to the leg D, now a peak D, a possible peak D this week. So even there, I'm looking at something that's gone from the 2s up into the 7s. I mean, that's fantastic action, taking a really well-deserved break. So this is what I'm looking at. Within the market, this is what, for subscribers, I've said. So we've built up another cash position. I didn't really want to do it, but I didn't want to be vulnerable to something that happened when Thursday's ugly on a big move down. Thursday's even uglier. Then Friday turns out to be quite ugly. That says you've just got, whatever the story, you've got to be careful, because if the bad news continues over the weekend, it can drag everything down. Well, in a sense, we kind of saw that both on Friday and today. Now there's a rally comeback because there are a lot of people that are really wanting to buy the dip. That's just the habit is to buy the dip. Today's one of the first times that I said to subscribers, we're not going to be buying the dip. I need to have a day, even if it closes higher. I just need to have some sense that there's a foundation that I could look at for where the stocks trade intraday. I can look at this and say, yeah, that held, that didn't hold. What was it? What sectors are trying to do okay here? So that says to me that this is, once again, a rotation of the stocks that were the best. That's the whole area of offshore drilling. There's oil, OIH, the oil service, the actual multinationals. I think they're going to be digesting these gains for a little bit longer. Is it telling us that the world economy is slowing down? So what I said to subscribers, let me just show you this. I had a whole thing for every weekend. I have about an hour long, sometimes a little less, sometimes a little more, an hour long video called Overview. And it looks at what's happened, what's going on, what I'm anticipating. And I started off again, I haven't done this for a little while, I started off with this particular chart here. This is a chart that has my Chapman Wave Dark News cloud cover. And basically what this says is, going way back, I mean, I can go back, you'll see these big rectangles. And when I look at, there's a period where I say, I believe we're starting a dark news cloud cover. And what that's kind of does is it looks at an internal high with a possible residual high, either higher or lower, and then we come down. And then the low is made with an internal low or residual low. It's like an earthquake and an aftershock. And then what I said is, in this particular phase, which started off in November of 2022, I typed in DNCC, which is dark news cloud cover, using the Dow. I said, are we looking at a trading range that has seen an internal high, a residual high, and then an internal low and a residual low, and it's just stuck doing this. And now we've broken this particular support. Now you've got this huge trend line that goes all the way back to January the 5th. There's a daily chart, January the 5th, 2022, the Dow's all-time high. And now what we're looking at is this support level, which should have been, it was a resistance level, now it's a support level, is being tested. Will this test hold, or is this going to become maybe an internal low, then there's a bit of a bounce, and then we make the residual low, and where it is going to be really important. And what it says is, the gray area says there is uncertainty in the market, and the market is reflecting it. There is economic, or political sometimes, but it's mostly economic uncertainty, and it's reflected in the price. Therefore, we're in a narrower trading band. Now we've broken the trading band, which says you should try to get back in quite soon. That would take you to about 32,005 to 32,700. That's where you see either a rollover, an arch formation, and we roll over and we come back. This is a really important phase. So with that said, and what I'd spoken about is, this is like a quagmire. This is like little landmines, little pocket eruptions that keep going off. And I was thinking that there was a chance that this low that was made here in October in the 28,000 area in the Dow is really a pretty serious low. And then I always look at 6-month increments over the decades, not just the years, but the decades, where sometimes you can get a low in October and then you get a residual low in March. That March low is either lower or higher than the previous one, and sometimes the semiconductors lead the way and they don't make it, they don't get to the October low. They hold higher, or sometimes the semis go to the lower low, but the S&P doesn't. I like to look at them in sequence. So this is saying to me, this is where all the little landmines are. You got to be very careful. But I'm anticipating that, look, even with this horrible, horrible news, at 28, let's go to the low today, the low of 31,624. We are still over 3,000 points off the low that was made in October. And what I was saying is it possible that we chop around, acknowledging that this is a period fraught with all sorts of hindrances to the market going up, but somehow or other we go for another at least a couple of months, maybe get through March, the low of March, and we get through it without taking the October low out. That to me is important. We can take a year and a half, 2 years of a big consolidation when we come out of it. Imagine if we come out of it and the financial, you remember I thought the financials had all the stress test they passed with flying colors, and yet, wait a minute, if they passed with flying colors, why is a Bank of America, which is trying to come back today, it's down $1.23, 37 down to 27? Why is it stuck like that? Why is JP Morgan, one of the premier banks, down from the 144 level to the 128? Well, we'll see. I'll be back in a moment, Dallas.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So yesterday I went to a talk. Someone had written a book on Janet Yellen, and he has followed her closely for 23 years or whatever it is, a long time. It was really interesting. My suspicion was that he didn't realize it, but he was internally, just as an author, so kind of, well, as a journalist, actually, he writes for the Wall Street Journal, kind of married to her. He didn't say many negative things at all. I would like to balance it by saying there are negatives and there are positives. So I was, in that sense, I was disappointed. It was fascinating to hear just a whole bunch of stuff. So, and that's kind of what I'm looking at in the market, that the market is taking this news kind of benignly, but in fact, there are really big implications that are coming on with everything that's just been done over the weekend. And when things are done in a rush, and remember, I used to complain because Barney Frank was from my district here in Newton, Massachusetts. And I complained all the time. I'd say, I've heard him talking about people having to have houses. And it's imperative that why can't they have houses and everything? And then when the housing thing blew up, he said, oh, sorry. He didn't even say that. So, and here he is on the board of one of the banks that's just blown up. These people don't always know You think they know, but they don't really know. So you've got to do your own homework. You just have to do that. And my homework says right now that there's a real tussle between buyers and sellers, but the next 3 or 4 days are going to give you really good clues. What's holding here? What is in the sieve? What are the grains that aren't falling through the holes and that are holding well? And this is going to be really important. Any new position, or even thinking of shorts, and we'll see what happens the next day or two. Dow's up 153 as we wrap it up. Buying's coming in again. Have a wonderful rest of the day. Stay tuned for Steve. Check out both Performer Daily newsletter and great programming here at TFNN. See you.